Markets crashing, stocks are getting absolutely obliterated here today. Yeah, I bought a lot of stocks. I'm going to show you all that. We got a lot to talk about in today's video. It's going to be a busy video, action-packed as always. I appreciate everybody for joining me. About a month ago, I put out a video that said buy stocks heavy this next 6 months. And when I said that, I'm one of the few that, talks the talk and walks the walk. And the way I look at this is we got a few months left here of this kind of crash going on. And you have to be a heavy buyer out there in this market. On a day like today where things are crashing, I am going to be buying heavy, okay? 800 shares of Honest, 10,000 shares of Avant, 155 shares of Shopify, 11 shares of Meta, 116 shares of Palantir, 220 shares of Corsair Gaming, 448 shares of Oatly, 500 shares of Chef. Did you think that was it? No, that's not even it, okay? Then a whole bunch more Chef shares, another 222 Oatly shares, 1,000 Planet shares, which I haven't bought Planet in a bit, 10 Google shares, 15 PayPal shares, 10 Amazon shares, 20 Meta shares, and 70 Corsair shares. Yes, okay, adding very, very, very aggressively, and no plan to stop anytime soon. Let's just put it that way. This is one of the rare moments I've ever seen in the stock market where you can get just stocks getting absolutely obliterated. The market's in full-scale crash mode, and getting to buy for a decent amount of time. In the March of 2020 crash, it was so quick and then it was so fast back up. You didn't even really get to add positions. It was like boom, straight back up, right? This is a sustained crash. This is one of the rares you ever get, similar to like the tech bubble crash, similar to obviously the great financial crisis where you actually got a good amount of time to add positions here. And I'm loving life, okay? Loving life. That's all I'll say about that, okay? If you look, it's absolutely disgusting out there today. A stock like Shop that's already been taken to the chop shop is down 8.5% today. Tesla, which let's be honest, okay? Let's just be honest for a moment, all right? Everybody that has looked at the stock market has said, we cannot bottom out the stock market until two final stocks, the two final bosses fall. When the two final bosses fall, then we can have a true bottom in the market. But until those two final bosses fall, we cannot bottom out this market. What are the two final bosses? One is Tesla stock, and the other is Apple stock. And so until those final bosses fall, no one feels comfortable in even trying to say, okay, I think we're bottoming out here. And so a day like today is needed in the market where you see Tesla down 7% plus and you see Apple get a rare downgrade here today, down over 5%. And it's just an obliteration out there in general. Uber stock down over 7%. AMD's down to 63 now at this point in time. Where's AMD going? 59, 55? It's definitely possible. Nvidia's flirting with going under 120 now at this point. I mean, when by the end of this, where's Nvidia going to be? Under 100? I mean, it's just insane, right? McDougal obviously continues to get leveled. All these stocks are just getting obliterated just across the board, right? You obviously look at the Cathie Wood related stocks here today. Woo, it's ugly times ugly out there. I mean, just to be quite frank, awful, okay? Housing stocks. Yeah, these ones just continue to get tore up and will continue to get tore up for likely until the end of the year at least, in my personal opinion, okay? Rocket. My goodness, this thing is rocketing down. Is it going to go to the fives? It's definitely possible. Rocket down 5.4% here today. Refinancing will be nice again someday, but it's not right now. I can tell you that. Not with rates at 7+%. Refinancing's dead. Mortgages are dead right now. The whole real estate market's just donezo for probably the rest of this year, to be quite frank. That's just the way it is out there. And, in terms of these stocks, they just can't, there's no hope for those anytime soon. Fintech stocks just continue to get obliterated. Affirm's flirting with going down to new lows now, or I think it's right about there. I remember it was right around here back in the June lows, essentially. Coin is getting smashed. And the thing that's interesting about Coin is Bitcoin is held up decent over the past few months. It went down to 20K, 19K, and it's kind of been flirting there. If you're thinking about where's the next leg lower for coin, that's if Bitcoin was to fall to that 10 to 15 range, which a lot of people are looking at as like being a realistic possibility. If Bitcoin falls to 10 to 15 range, look at coin at $40. That's kind of what you'll be looking at there, okay? Upstart just continues to get absolutely up, beaten up, man, just nasty. SoFi's under $5 now at this point, down to 484 in this one. You know, I think the thing that's important, because people look at these stocks and they just absolutely getting shredded, and they think like the companies are all bad companies. Every single company's a bad company. It's not the truth at all, okay? When you're in this sort of market, it doesn't matter. You're getting absolutely smashed. And no different than when you're in a hot bull market, right? Any stock goes up, just about. I don't want to say every single stock, but just about every stock goes up. Whether you're a good company, bad company, whether you're doing a good job running your business, bad. So in this sort of market, people just see these stocks getting obliterated and they assume every single stock is garbage and it isn't ownable. And that's not factual whatsoever. A lot of these companies are actually have bright futures and have great days in front of themselves. Just in this sort of market, you know, Wall Street and the algos, they don't want to own anything right now. And that's the market we're in, and we're going to likely be in for just the next bit of time here, essentially, okay? Square is down to 55. The hood stays under $10. PayPal getting hit again here today, okay? Travel stocks, oh my gosh. You know, one day these stocks finally have a good day, and then the next day it's like way worse, okay? I mean, look at CCL's flirting with going under 9 at this point in time. RCL, Royal Caribbean, just continues to get hit. All the airlines just can't do anything. I mean, fuel prices have been coming down, but even with fuel prices coming down, no one wants any of the travel plays because now they're like, oh, we're already past the revenge travel summer. No, at this point, so it's like, I mean, they just can't get a break. Then if things start to go up and get better, then fuel price might go up, and it's awful across the board. You know, airlines are interesting. Am I going to buy airlines? Absolutely not. There's way too many other good deals out there in the market. But I got to say, airlines are interesting. At the end of the day, the world's opening back up and has opened back up. International travel is getting going again for businesses, which is extremely important. That's not going to stop. And I think a lot of those airlines are actually in a decent position, but I'm not buying any of that. You know, at the end of the day, there's way too many other stocks that I think has 2x, 3x, 4x, 5x type potential over the next few years versus the airlines, which I think has like, you know, I think those will do well over the next few years, but no, not in that commoditized industry, okay? You know, you look at a stock like JP Morgan, right? And this is the issue when you go through one of these crashes, is it wipes out years worth of gains. When you go through a true crash, you are wiping out years of gains. JP Morgan, which is the most well-run, respected, most important bank in the world, JP Morgan's up 10% in the past 5 years at this point in time. It's had all gains basically wiped out from the stock. And this is what you see in a real crash. You see years worth of gains completely wiped out. We watched this play out in the great financial crisis, where you watch stock after stock completely wipe out years of gains. And not just go to like 52-week lows, but in many cases stocks go to multi-year lows. And the lowest they had been in 3 years, 5 years, 7 years, sometimes 10 years, depending upon the stock. That's what you see in a true crash, a real crash, okay? And that's exactly what we're seeing play out right in front of our face right now, where these stocks are wiping out literally years of gains, right? You look at a stock like Meta. Meta's knocked off all the gains it's had over the past 5 years. And this stock is now down 20% in 5 years, which is absolutely stupid and ridiculous and shouldn't be like that, but it is like that. And so you can complain about it, or you can buy the stock and say, you know, this is a ridiculous deal I'm getting on these shares right now, okay? That's what happens. Intel, you know, in the past 5 years, the stock has lost 31% of its value. It lost everything. So even if you collected dividends over the past 5 years, you're still down big on Intel. And I mean absolutely big on Intel. Toll Brothers, this stock is now break even in the past 5 years. And think about how hot real estate got. I mean, you're thinking about a time period where real estate prices went to all-time highs, where, you know, Toll could just charge whatever they wanted for homes, for lots. People were doing lots of premiums in their homes. Business is the best it's ever been. And despite all that, that stock has nothing to show for it. And now it is the same price it was 5 years ago, despite all that revenue they made, all that net income they made, all those homes they sold, all the progress they made, and the stock's the same price it was 5 years ago. That's what happens when you are in an epic crash, man. Stocks lose years of gains. It very rarely happens. It very rarely happens. But once every 10 to 15 years, this does happen, what you're seeing in front of yourself, right? Zillow is down 28% in the past 5 years. Think about, you know, all the use cases, all the money they made, you know, and how hot their business was for a time period there. What's it add up to? 28% down in the past 5 years. That's real crash, okay? Year to date, I just pulled up some of the most popular, biggest companies in the world. And look at the year-to-date moves. Remember, we haven't even been through 10 months of this year. Shopify's down 80% year-to-date. AMD's down 58% year-to-date. NVIDIA's down 60% year-to-date. Adobe's down 51% year-to-date. PayPal's down 55% year-to-date. Netflix is down 60% year-to-date. Meta's down 60% year-to-date. Intel's down 50% year-to-date. I mean, wow, those are some of the biggest and the most famous companies in the world. Just being treated like penny stocks. Let's call it what it is, man. These stocks are being treated like penny stocks. The most famous, the most successful, the best companies in the world are being treated like penny stocks. When you start talking about stocks going down, you know, 40, 50, 60, 70, 80% in a matter of 10 months, yeah, you're a penny stock at that point. And every single stock in the market now is being treated like a penny stock. That is the moment of time we're in this market, okay? The Russell, check this out. Now, I posted this in a private stock group recently as well, right? In the past 5 years, the Russell's up 11%. In the past 5 years. So basically, small cap stocks have gone nowhere for 5 years at this standpoint, okay? Now, it's been a horrible operating environment for any of the small caps, right? You had Rona come out of nowhere. You had the whole tariff situation which hurt a lot of small caps. Then you had Rona. Then you had this disaster mess, which of inflation and commodities going up. Such a mess small caps had to deal with. And keep in mind, all companies had to deal with this, but the ones that usually have the biggest trouble dealing with this are small caps, right? And if you're going into a market where no one wants to take risk, what do people sell off first? As we saw, it was the small caps, right? And so small caps, people like, I don't want any piece of those stocks. Don't even talk to me about a small cap. I don't care what their business is. I don't care what their revenue is. I don't care what their long-term opportunity is. I don't care what their net income and their margins are going to over the next few years. Don't talk to me about small caps. That's what people will say, okay? And so if people are positioning in anything, it's usually cash, or it could be hedges of some kind, or it can be in some of the large caps like an Apple, to hide out an Apple or something like that, right? Which we're starting to see even Apple start to deteriorate at this point of the market, right? So that's very telling that the Russell's gone nowhere in 5 years, okay? Now, retail is leaving this market and has been leaving this market this entire year, and it's just getting worse, actually, which is quite interesting, okay? So if you just, you know, go into Google Trends. Google Trends is your friend. I always say that, okay? And type in some popular search terms like how to buy stocks. It's crashed, okay? How to buy stocks has crashed. No one's interested in buying stocks. Why? Well, everybody's been absolutely destroyed in stocks for the most part, right? We're in a crash, and when you're in a crash, most people don't want to buy stocks. Inflation's been slicing and dicing a lot of folks that are in the middle class, so they don't have money to buy stocks, right? So, you know, if you make $40K a year, $50K a year, and you have to spend way more at the grocery store and at the gas pump because you don't have electric cars and things like that, right? Well, shoot. All of a sudden, where's your extra money to buy stocks with? You don't have that extra money to invest, right? And so that's why we see this trend playing out right now. And unfortunately, it plays out like this in every single crash. Every single crash. This is just a very different crash than we had in the Great Financial Crisis. In the Great Financial Crisis, people couldn't buy stocks for a few reasons. They were scared. Stocks had completely crashed, which scares away everybody in the market, right? And people were losing jobs en masse. So therefore, like, people couldn't buy stocks, right? Two of those same things have happened now where, you know, basically stocks have crashed. People get scared. They don't want no piece of it. And the different component here is inflation. And inflation has treated people just as bad as pretty much losing your job, right? Because you have no extra money to spend out there, essentially, right? To buy stocks and things like that. And so it's a different way we got to the same place as a great financial crisis, right? The only difference is the government backs things a lot more than what they were backing going into the great financial crisis, especially in relation to debt. You know, look at what happened in the UK yesterday, right? You know, they get a little, things are getting a little shaky. Government comes bail things out. That's the difference between the financial markets in 2022 versus the financial markets in 2007, 2008, is as soon as something gets really shaky, the government doesn't mind Shopify stock going down 80%. The government doesn't care about that. The Fed doesn't care about that. But when all of a sudden, you have more systemic risk out there, that's when the government starts to step in and do things, right? So it's a different, we're in a different financial age, I guess you can say, than in past crashes. If you look at how to buy stocks over the past 5 years, yeah, man, we've crashed. That's just the bottom line there. It is bad times bad. And man, this happens in every crash. That's a problem, man. Every crash, it's the same thing. This is no different. If you look at a search term like Tesla stock, right, which obviously one of the most popular retail related stocks out there. I mean, look at the search terms for that over the past 12 months. It's just down, 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 down. And that's exactly what's kind of happened there, right? Unfortunately, one that remains persistent is margin call, right? But look at what's happening here. This is very important, okay? So the first time margin call really ticked up was in the February sell-off, okay? Then it went crazy in the March sell-off, which tells you how much people had on margin going into that situation, which is scary to think how much people were margined when the market was basically at all-time highs. Because what it looks like is people were margining heavy in October, November, maybe even into December. Then they got their first batch of margin calls in February, and then they got their big batch of margin calls in March, right? Then, I'm guessing a lot of people sold, right? And then margin call ticked up again in that June bottom, essentially, right there, right? Which was stocks were getting hammered. So it wasn't as crazy because a lot of people already got margin called. They got out of margin. They sold stocks, right? Then, people probably continue to sell. And recently, we've had another margin call situation. But look at how the tick ups are less and less each time. Because what's happening is basically retail has less on margin each time these margin calls come in, essentially, okay? And don't be surprised if we continue to fall on that for a bit more. Now, in terms of the numbers behind this, a margin, we just got the August numbers finally out. We're down to $687 billion of margin outstanding basically at the end of August. Now, remember, the market really got ugly at the very end of August going into September. And September has been absolutely a disaster zone for the indexes and for the market, right? So if I had to guess, I think this September crash will take us to the 500s, which is the first time in years, in many years, that we have been in the 500s for margin debt. There's no doubt in my mind, based upon how vicious this sell-off has been in September, there's no doubt in my mind that we're going to be, if we're not in the 500s, it's going to be very, very close. Let's just put it that way, to the 500s. And so margin debt is getting to obviously much healthier levels that we were years ago. So if you want to look at another thing, that if you're thinking of getting close to a bottoming out in the market, that's another telltale sign that you're getting close to the bottom of the market. Retail capitulating, completely leaving the market. Obviously, things like margin falling massively. You're getting all the signs of getting close to a bottom are all starting to play out in front of yourself. Every single last one of them now at this point in time. And that's just another reason why I feel like we're, let's just call it sooner rather than later in terms of bottoming out this baby and countless stocks out there now at this point in time, okay? Now, in terms of me personally, I'm going to continue to be aggressive in the market, okay? And especially for the next, I would call it, the next few weeks. Very aggressive in the market. Any major sell-offs in the indexes and in stocks in general, going to be a big buyer out there. I am definitely I think things are playing out perfect in terms of selling off heavy going into earnings. I think if we can get CPI come in at something not crazy, let's just put it that way, under 8, let's hope, and then we can have earnings be decent. I think it could begin to become a little bit of a fun time in the market, and you'll see some insane kind of epic rallies, which, remember, there's a lot of stocks that are heavily shorted now at this point in time, a lot of people underweight, and I spoke about this in detail in a video a day or two ago, in how Wall Street follows each other around, and if you start to get any sort of positive momentum in mid-October to late October as we go into November, the pileup has to start happening on Wall Street, or people start way underperforming the market and it becomes like the self-fulfilling prophecy into year end, where you get this kind of, let's just call it a beast rally into that whole situation. And then we'll see where things kind of shake out for 2023. But my plan is to just kind of continue to be aggressive out there in this market and do my thing, buy stocks, and any major dips out there, I'm buying heavy for the next bit of time here, guys. Hope you enjoyed this video. As always, if you ever want to say hi to me, you enjoy the video, videos and whatnot, and send me a DM on IG. So I'll try to get back to you and say hello back and maybe chat a little bit. So appreciate everybody joining me as always. Everybody subscribe to the channel. Thank you. Much love as always, and have a great day.